I'm going to log in the call now.
Good morning. Today is Monday, November 7th, 2022. Hope you had a great weekend. It was a lot of football this weekend. It was a great football weekend for me. Seahawks won, Washington Huskies won, University of Georgia won. Condolences, Tom. How are you doing?
I would just like to point out that there have been previous national champions who have taken a really embarrassing loss late in the season. I can think of some examples like, I don't know, last year. So it's not over, let's just, I would also argue there are a lot of people who are very mad about the rankings. I would argue that good for Georgia for finally getting a good team on their resume after playing tomato cans all year. It was very tough to gauge their.
Oregon's a top 10 team.
Well, arguably. There's no such thing as a top 10 team with a Bo Nix quarterback, in my opinion. But no, we got stomped in the first half. Second half was 3-0. Not exactly an impressive output in the second half from the Georgia Bulldogs, but I appreciate how well they played in the first half. It was a very good game, but not for us. Also, I would say it was a safety, if we're being honest. I don't know if anybody watched the game, but that was definitely a safety.
I agree. I very much agree.
So we'll give you those 2 points as well. Moving on. Hey, we're still in it. It's not too early. A lot of people lose games late in the season and still win national champions. Well, I think in 2017. 2017, Georgia got stomped by Auburn late in the season. Still went to the national championship and almost won. So it's not over.
We'll see what happens. China really drove the markets higher on Friday. The rumor was, and we mentioned this toward the end of the call, but that was unsubstantiated, that China's moving away from the zero COVID policy. On Saturday, they said they are not moving away from zero COVID policy. They're going to stick with the, quote, dynamic clearing approach. They say that their measures are, quote, completely correct, as well as the most economical and effective. At the same time, they also said that the measures must be implemented more precisely. They said that some areas had been guilty of, quote, unscientific one-size-fits-all lockdowns. And they actually called out 3 cities, Nanchang, Beijing, and Zhangzhou. Keep in mind the name Zhangzhou. We're going to be talking about that later in the call. I actually think that this is a recognition. The practice of the Chinese government is that they never admit that they were wrong about something. That's just, you can't do that. And I think this is similar to actually a pivot on the COVID zero. And I think that people are looking at the Saturday comments and saying, they just squashed the claims that they were going to pivot on zero COVID. I think by talking about being more precise in how they're applying it, things like that, I think that that's actually showing their hand, and they are pivoting a little bit more on the COVID zero. And they actually called out places for being too strict on COVID policy. Tom, what are your thoughts?
It'd be interesting to see what they do going forward, because they've stuck to this long after everyone else has. I do worry that the unscientific one size fits all means something more along the lines of you get COVID, you disappear into the night, and no one ever sees you again. Which, it doesn't affect me personally in the sense that it doesn't hurt the supply chain, but at the same time, it's probably a cause for human rights violations. But I sort of feel like, you're closing the door, but you're opening a window on a different approach to a zero COVID policy, which might be a little bit more barbaric, just given the track record.
I think that's fair. I also think that, we have record COVID cases right now in China, as high as they've been since May. And in previous stints, you'd have seen the whole country locked down, and clearly that's not the case right now. But I agree with you that from a global macro perspective, I think that there's a pivot that's positive for the overall piece of it. Although I would say it's not going to help oil prices, and oil prices are going back up again today. But I think it will be better for the supply chain. Meta is planning large-scale layoffs. Their stock is up about 3.5% today. Again, Meta, the parent company of Facebook, Instagram, and WhatsApp. I've been seeing more and more WhatsApp ads, and they're spending a fortune on ads, and I thought they were supposed to be cost-cutting right now. So that doesn't make a whole lot of sense, but they will start to cost-cut because they're planning their biggest layoffs ever in the company's history. Mass layoffs announcement could come as soon as Wednesday. And this seems a lot more urgent than what they said on the conference call just 2 weeks ago. They said that, quote, some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. Now they're talking about mass scale layoffs. And I actually think this is probably good news for the stock because it seems like Zuckerberg's getting the message on some of this stuff. I think the stock is sending him a message. And I think that when it's hitting him in the pocketbook now, I think he's starting to now look out for number one, and that is the Zuckerberg family fortune.
Yeah, I think the thing with Meta, I was thinking about this because I saw the same commercials a million times this weekend while watching football for WhatsApp. My thought is that might be the only way they can really directly attack Apple, because for the most part, people are sending text messages with their phone and using iMessage for the most part. Assuming you're using the predominant phone, the Apple. So my thinking is that that's maybe one way they're trying to maybe get some leverage over them if people move their text messages off of whatever phone they're using and into WhatsApp, so they can maybe potentially scrape more information in terms of their AI.
But it has end-to-end encryption.
It has end-to-end encryption. Sure it does. So does Google, or so does Gmail. But the thing is, if you don't have a Gmail, they've also got your emails, because your emails you send to people who have Gmail are also being archived inside of the Google universe. So if half people have Gmail and the other half don't, then you're probably, all of your emails are stored on somebody's Gmail somewhere. So that's something to consider as well, which sure it's encrypted, but you seem to get a lot of ads for stuff that you've already bought before, and you get a lot of emails from those companies as well. So something to think about. But that was kind of my only thought, is why would they be spending so much money to get people to get on WhatsApp? I don't really know what the monetization is of WhatsApp. How much money can be made from sending text messages that are encrypted. My only thought would be they're scraping some sort of information off of that they can use against you.
Yeah, so Meta stock up a little bit to this morning. If this is a sign of more cost cutting to come at Meta, I think that's probably good news for the stock in the near term. Good things happen at cheap companies. The Meta stock is definitely cheap right now. However, the top line is going to be under pressure going forward, I think. Sticking in tech, Apple on Saturday came out with the most bizarre press release. It was 3 paragraphs long, probably about 10 sentences total. Said that shipments of the iPhone 14 Pro and the iPhone 14 Pro Max will be lower than previously anticipated. Customers are going to experience longer wait times to receive their products. They said that demand remains strong, and they said that what's to blame is Zhangzhou. Now think back to what we were talking about earlier. China called out Zhangzhou for an imprecise application of the zero COVID policy. Now Apple calling out Zhangzhou as well. I think this is fascinating. I think that Apple is really trying to stick it to the Chinese right now, especially the people in Zhangzhou, saying this is ridiculous. We can't lock down. So they're going to be about 3 million iPhones short of their projections, which, call it $3 or $4 billion, or about 5%, 5 to 10% of revenue for next quarter. So that's definitely meaningful to Apple's bottom line. They do say demand remains strong. What's notable here is that Apple just reported 2 weeks ago. And so to come out and warn on guidance just 2 weeks later implies that Zhangzhou was completely locked down for the 2 weeks. Not many phones produced at all, and they fell really behind on production. I'm curious as to what's going on here. It seems like Apple and the Chinese Communist Party are more aligned against a single city versus Apple against China at large.
That's an interesting thought. I hadn't thought about that. So the question is, how many heads are going to roll from the Zhangzhou communist leaders who shut down the city? But it's interesting because you almost never see this. You almost never see a large multinational company go hard against China. And maybe they're doing it in sort of going around the main party by going directly at the city. But it doesn't look good. There's the concept of face is very prominent in the Chinese culture, which is that you don't want to be embarrassed or called out, or you want to show that you're the best all the time. And I think that this is maybe an interesting way to go about that, to sort of poke holes in what's been causing so many problems with China and the supply chain, and getting production lines back up and running by basically going out directly and saying this is an embarrassment might actually be more of a motivator. Shame is a powerful motivator. So maybe that's the way to do it.
I'm seeing a lot of headlines today that it's a supply issue, but demand is the real issue for Apple. I really don't think that's the case. That's unsubstantiated from anything that I'm seeing. In fact, Apple actually said that demand remains what it was 2 weeks ago. Which
Particularly
was,
for the pros, right?
yeah,
The highest
exactly.
end phone, the biggest moneymaker for them.
Now, if you go online and you look in to buy a phone and now it's a 3-week delay to get it, maybe there's going to be a lack of urgency and say, maybe I'll just punt on this if I can't get it tomorrow and have that immediate gratification. So maybe that plays a role into the demand, but overall, people still want the new iPhones and they're willing to pay for them. And Apple's financing schemes really make them affordable. So I don't think this is a demand issue. I think this is a supply issue. And I think the Chinese angle here is extremely interesting. Speaking with Apple, Berkshire has a 41% of Berkshire Hathaway's investment portfolio is invested into Apple. So when you're buying Berkshire Hathaway, you're really almost buying an Apple tracking fund. They also have a large position in Bank of America, American Express, Coca-Cola, but Apple's by far the largest position. They posted a loss, Berkshire Hathaway did, of $1.22 per share for their Class B shares in the last quarter. But it's really interesting, and only Warren Buffett can make a statement like this in an audited press release. And he says, the amount of investment gains or losses in any given quarter is usually meaningless and delivers figures for net earnings or losses per share that can be extremely misleading to investors who have little to no knowledge of accounting rules. So basically, he says, if you are upset that we lost you money in the last quarter, it's because you don't really have any knowledge of accounting. So that's kind of on you. Trust me, everything's good. And I do have some empathy for Warren Buffett here, and I do think he's correct. But it also seems like an extremely arrogant statement to make when you've lost money on a mark-to-market basis and say, nothing to see here, move on. And we have that conversation. We've fixed income, and if fixed income price is low, you're still going to get paid on that. But that doesn't mean you're going to be able to sell that for 100 cents on the dollar today.
Yeah. I mean, it's, tell the truth Tuesdays. Coach Ed Ogeron had tell the truth Tuesdays. Sometimes you got to say, hey, listen, we lost money in this quarter, and that's what it is. We got to do better next week, next month. So I think it's not a good look. You got to have some hubris on these things. But Warren Buffett is not known to be a normal functioning human being with normal human interactions. So that's the why he is the way he is.
That's true. And we have some tales for another time on that. Merger Monday. Walgreens is looking to buy Summit Health. Maybe that deal has actually officially been announced now. I don't know. When I was putting these notes together this morning, it was more highly substantiated rumors and not in fact. But Summit Health is essentially operates urgent care centers, operates medical practices. This would be about a $9 billion deal, which would be big for Walgreens. Walgreens currently has a $32 billion market cap, so you're buying another 25% of the company. They already have a lot of debt. They're BBB rated, but this is going to take their debt to close to 5 times net debt to EBITDA. Cigna, the insurance company, is looking to co-invest on the deal. It follows Amazon's move to purchase One Medical this last summer. And this is what you're seeing. You're seeing a lot of healthcare consolidation in terms of vertical integration, owning all the means of production throughout the chain. You've seen this with United Health. You've seen this with CVS. Now you're seeing it with Walgreens/Cigna. I think this is a necessary move for Walgreens, but it's an expensive move and it's a risky move, especially going into a recession and a higher interest rate environment. I'm curious to see if they get their debt lowered. Presumably, they've had backdoor conversations with S&P and Moody's, and they're going to maintain their investment grade rating, but that's on the chopping block potentially.
Yeah, I mean, they're probably going to have to pay top dollar for that too. The credit agencies are not known for turning down money in exchange for a lenient version of the truth on their ratings. So that's always something to keep an eye on. And really, honestly, as we kind of go through all these different mergers, we need to be really careful with what companies are doing, how they're doing it when it comes to acquisitions right now, because you can sink a ship very quickly by buying the wrong company in an environment like this with interest rates going the way they are. If you lever up, suddenly your credit rating drops. You start to get multiples on top of your net debt to EBITDA. Like you can sink a company very quickly by making acquisitions. And so that's something we need to keep an eye on.
Yes, and we have two more, one good, one bad, I would say, in terms of mergers. The good one is Philip Morris and Swedish Match. Elliott Management, that Paul Singer fund that was really trying to be activist and push Philip Morris to paying more. They ended up, stepping aside and saying that they were going to vote with Philip Morris shareholders and in support of Swedish Match. So it looks like that deal is going to go through. $16 billion deal, probably good for Philip Morris, gives them a little bit of an entry into the U.S. market and really sets the stage for a big battle between Altria and Philip Morris for the U.S. market going forward, with Philip Morris's IQOS system, the heat not burn IQOS sticks, as well as the nicotine pouches, the Zyn pouches. And the bad one, Ritchie Brothers auctioneers to buy IAA. IAA was spun off from Car Auction Services. They compete with Copart, which is basically they take an insurance company will total out a car, and then companies like IAA or Copart will handle the vehicle, handle the towing, handle the yard operations to store the vehicle, and then handle the sale of that totaled out vehicle. You're seeing more totaled out vehicles today because of all the electronic components on it. Insurance companies are totaling out those cars. But on the other hand, you're also seeing higher prices on salvage vehicles because of the tight used car market, and I expect that to go down. So we actually owned IAA, but because they didn't own the means of production like Copart did, they didn't own the lots, they leased them, and because they didn't own the trucks, they outsourced that. They really got hit by a lot of the supply chain issues, and we ended up selling that position. And in the end, this acquisition is going to be done at a decent premium, but a lot of it's in shares, and I don't expect the company to perform that well. I don't think it's a great acquisition by Ritchie Bros. If I had to put a point on that. Looking to the week ahead, big thing is going to be CPI on Thursday, but we do get Disney earnings tomorrow afternoon, and then of course everyone's going to be paying attention to the large retail investor base is going to be paying attention to the midterm elections tomorrow evening. Tom, in your experience, how much do you think the elections, especially the midterm elections here, will play an impact on the overall market?
I mean, typically I feel like you see a bump. Famously, when Trump got elected, futures fell like 1,000 points overnight, and then we had a massive rally the next day. So there's going to be a lot of sentiment. Whether or not it ends up negative or positive, it kind of depends. I think that there's going to be less of an impact if there's no clear, concise situation where we have winners and losers, which I'm a little bit worried about. A lot of contested elections would be, I would argue, spell bad news, because there's going to be more uncertainty. The more uncertainty there is, the less market likes it. But my hope is that there's a clear, concise conclusion. Everybody knows where the market's going, and everyone can kind of remove that uncertainty. We know who's in office, so we can move forward in a positive direction. Yeah,
I would agree. I think that it'll be very interesting if President Biden does, as polls suggest, have to deal with a Republican House and a Republican Senate. Will he tack back a little bit more to the middle versus where he's been the last 2 years? I think that would be a positive development. I don't know if that's likely. In fact, it seems unlikely at this point in time, but I would have some reason for optimism on that. And we'll just have to see what happens. But a conciliatory speech for President Biden, I think, could be the biggest positive for the market. I don't know if we're going to get it, but that would be a positive.
Yeah, I would agree.
On that note, we will see you tomorrow. Have a great day, and